Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. I was absent from the market for the last 10-11 days because my father expired. And as you can see that I'm with a new look, okay, because in India, okay, we need to follow rituals. Okay, the rituals are not yet over, but still I am back in action. So hopefully you all are doing well. So let's get started. So this is the 4-hour chart of gold USD in front of us, and yes, gold is standing at 1772. Yesterday when I look at the chart of gold, I was shocked because there has been a massive move on the chart of gold. So let's try to understand what are the important levels on the chart of gold right now. First of all, I would like to show you one thing that I can see very clearly, and that is a wedge pattern here. We have a clear-cut wedge pattern here, and in a wedge pattern or in a pattern like this, we usually see a drop on the chart. We usually see a trend reversal. So my dear friends, there is a possibility that today or tomorrow there may be a fall in the market. In case you see a heavy fall in the market, do not be surprised, because market is already indicating, giving us the indication that yes, there may be a fall in the market. And apart from the wedge pattern, if I take you to the daily chart of gold, then you can see that the 50 moving average has been acting as a dynamic resistance for the market, and right now market is just standing at the 50 moving average. Last week market tried to go high, market tried to go up, but the 50 moving average really acted as the dynamic resistance. So in this week we do not have any big factor that will be pushing the market in any direction. So more or less technicals will dominate the market. So in this scenario, there is a possibility that the 50 moving average will still be acting as a resistance, and if it does, then yes, there will be a fall in the market. Okay, we will see some correction on the chart of gold. I'm not talking about a complete fall of 1000 pips, 2000 pips. Okay, yes, what I'm saying is that there may be a good selling opportunity for at least 150 to 200 pips on the chart of gold. So what should be a trading strategy then? So my dear friends, if you do not have drawn these lines yet, then I'll request you to please draw these lines, because there may be a fall in the market. So what you can do is you can take a sell position. Okay, you can take a sell position if you see market breaking this line and going down, or in simple words, if you see market breaking 1765 66 level, if you see that there is a heavy fall in the market is forming big red candles, it means that selling pressure is there in the market, sellers have joined the party, and yes, you can take a sell position. Okay, you can take a sell position on the chart of gold. So it's simple, if you see market breaking this line and going down, you can take a sell position. But my dear friend, again I'll request you, please draw these lines, do not trade blindly. Capital is extremely important, protect your hard-earned money. Okay, so where is the support then? If you're wondering about the support on the chart of gold, then I have a good news that we have the support around 1754 55 level. And if we take the help of Fibonacci here, if we combine Fibonacci along with the support levels here, then you can see that 1754 to 1750 is the support zone here, because of Fibonacci 38.2% retracement along with previous price rejection from below. So if we combine both the factors here, then yes, there is a good possibility that market will be taking support here, and we can see or expect a bounce from here. But as we all know, no level is permanent in the market. Once you see market around this level, if you find market standing at 1754 55 50 level, okay, watch the market, observe the market. If you see the market is taking support, if you see the market is showing price rejection from below, then only go ahead with a buy position. If you see that market has come down to support but still selling pressure is extremely high, in that case you must be very careful and do not take any buy position and just watch the market. Okay, because if market, listen to me carefully, if market breaks 1750 level, if market breaks 1750 level with good amount of volume, then obviously there will be further selling and you can continue with the sell position as well, because the next support is around 1740. 1740, why I'm considering, because in forex market I have seen that the Fibonacci 50% retracement level plays a good role. Okay, so yes, we can expect that if market breaks 1750 or 38.2%, then we can expect 1750 to act as the next support. But my dear friend, 1750, 52, 53, this level will be playing a big role in case we see a fall in the market. If market bounces, well and good, we can go for a buy position. But in case market fails, then yes, you can consider a sell position below 1750 for a target of 70 pips, 60, 70 pips easily. Okay, and your next support will be around 1740. This is the strategy that you can follow on the chart of gold right now. And in case market starts going up from here, because the trend line is already acting as dynamic support here. So if market starts going up from here, then again I think that market will be facing some selling pressure around 1790 to 1800 level. Because if you just try to read the body language of the market here, if you try to study the emotion of the market here, then you can easily see that though market is showing some up move on the chart here, but the chart looks tired. Okay, and we have already seen on a daily time frame also that market is standing at the dynamic resistance here. If you really are interested, then you can also draw a trend line also on the daily time frame. So yes, I think that the previous high of 1790 to 1800 will still be acting as the dynamic resistance. So overall, this is the scenario here. So if market goes up, then we can expect 1790 to 1800 to act as still resistance. If we see market reversing from this level again, we can consider taking a sell position. Otherwise, already we have the trend line here. Definitely we can expect some selling pressure. So if market reverses, if market shows price rejection from above, if you see a shooting star kind of a pattern or any good price rejection from above, will give us the confirmation that yes, market is tired and we can expect a sell position. And yes, definitely you can click on the sell button as well. But on the other hand, following the wedge pattern here and the resistance from the daily chart, okay, if market really shows trend reversal signs here, you can consider taking a sell position below 1765-66 level as well, if the selling is good enough. Okay, and the next support will be around 1754.55 to 1750 because of previous price rejection as well as Fibonacci 38.2% retracement level. 1750, this is a round figure, therefore these round figures, as we all know, that they always act as psychological support and resistance. So please be careful. We can expect a bounce. In case market breaks it, then we can consider taking a sell position below 1750 as well. Let's wait and watch. So this is it. Hopefully you've understood. Bye bye, take care.